So you're welcome to today's class. Good evening, good evening, good evening. You're welcome to today's class. All right, today we are going to talk about the forex market. We are going to talk about the forex market. What is the forex market? I know most of you must have heard about the forex market. What exactly is the forex market? After today's class, you are going to figure out if your definition about the forex market is what it is, or if forex market means something differently. I don't know if you guys can see my screen. Kindly indicate if you can see my screen very well. Kindly indicate, please. Kindly indicate if you can see my screen, please. Kindly indicate. All right. And just type yes if you can hear me. Type yes in the group chat, please. If you can hear me, just type yes in the group chat. Just type yes in the group chat if you can hear me. All right. All right. Good. 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 Okay. So level 1, what is the forex market? The forex market is the global decentralized market for currency trading. This simply means that forex market or forex trading is the buying and selling of global currencies. Buying and selling of global currencies. You understand? In this case, when you buy a currency of other country, you take advantage of the economical health, either the country economy is in negative part or in a positive part. You understand? So, forex market is the largest financial market in the world. Forex market is the largest financial market in the world. And also history has it that over 7 trillion daily trading volume are carrying out in the forex market. I don't know how my voice is, you can hear me very well, but I'm going to try as much as possible to summarize this all the class. So I'm not going to be introducing higher definition or using much sentences to define what we are talking about. So after the class, I would like us to research about everything that we are going to be teaching today, or that we are going to be learning today, so you can have a larger knowledge of what we've talked about. So I can have a larger knowledge of what we are talking about anyways. So, as I said, over 7 trillion daily trading volume is carried out in the forex market and is the largest financial market in the world. You understand? So, that is it. Level 2, market participants. Who moves the market? You understand? When we talk about who moves the market, we talk about the central banks and government monetary policy. Secondly, commercial banks and investment banks. That's interbanks market. Then we talk about retail traders, individual like you and I, via brokers. You understand? So this is trying to tell us that central banks and government participate in the forex market through monetary policy, in the sense that a central bank of any country and the government, they introduce laws, monetary policy, while managing the economy of the country. You understand? So these laws and the policies they introduce can impact negatively or positively in the economy of that country. You understand? So when they make these policies, if it is negative, it's going to trigger a movement in the forex market, basically on their currency against other countries' currency. Then commercial banks and investment banks, that's interbanks market. This is also one of huge players in the forex market, in the sense that your day-to-day activity, your own personal account, and other businesses in the country, individual accounts, are seated under commercial banks. So when they come to play in the forex trade, they take higher stake in the forex market than individuals. Then we talk about retail traders, individuals like you and I, via brokers. Firstly, you and I as an individual, we do not have the qualification to key into the cable or the Swift network of the forex market directly. So the broker serves as an intermediary between you and the market. So your account is seated under these brokers. You understand? So when we start the class, you understand more, but this is just what it simply means. You understand? Your account is seated under the broker's platform. You understand? Because their qualification, they are the one qualified to take you on the transaction, just like in your bank, when you have a bank account in commercial bank, you understand, mostly you interact with central bank of your country through commercial bank. You understand? Because you don't have to hold individual accounts in the central bank of your country. So commercial bank serves as an intermediary between you and the central bank. So the same way the brokers serves as an intermediary between you and the forex market. So that is it. Please kindly indicate on the chart if you understand what I'm saying, and if you can hear me properly, kindly indicate on the chart before we proceed. All right, kindly indicate on the chart. If you can hear me properly, kindly indicate before we proceed. All right. All right. All right. Thank you. Thank you very much. Okay. So the next level 3 is what is trading analysis. What is trading analysis? Is the foundation of every market decision. Trading analysis is the foundation of every market decision. In forex and in financial markets in general, analysis falls into three core disciplines. So, guys, forget about the grammar or whatever. Forget about the grammar. In short form and direct definition is that trading analysis is of three types in forex trading. As a trader, the first thing you should know or do is to understand these three trading analysis as a trader, because they are where your decision making, how do I put it? Okay, just as written on the chart, they are the foundation of every market decision. Meaning, before you take any trade, you must consider and understand these three trading analysis. That is what it means. You understand? So, the first one we have here is technical analysis. Number one is technical analysis, TA. So, technical analysis is history of past reflected price charts, past price action, chart patterns, and mathematical indicators to forecast future price movement, meaning history repeats itself and all known information is already reflected in the price chart. Technical analysis focuses on studying past price action, chart patterns, and mathematical indicators to forecast future price movement. You understand? So when we move further, I will explain more. In technical analysis, this is where you have your support and resistance, candlestick, movement of the market, that is price chart a pattern. This is where you have your indicators. You understand? All these are elements of technical analysis. You understand? Let me show us something. Let me show us the chart, how the chart looks like. Okay, so this is technical analysis. This is what chart looks like. And as you can see, technical analysis tells us that history repeats itself. You understand? Let me show us quick example of what it means by history repeating itself. Let me show us what it means by history repeating itself. Okay, take for instance, you see, this is us USD. That is gold. I normally trade on gold USD. You understand? Let's say last few days, the market was seated here before it bucked massively to up. Getting to this place, this is where the resistance is. I will explain more about the resistance, support and resistance to us, but I just want to show us what it means by history repeat itself. Like everything that plays on the chart is talking about technical analysis. You understand? This is where the market resisted here. Sorry. The market resisted here twice, 1, 2, 3, and draw down, resisted again and draw down, resisted again and draw down, until it can no longer hold. You understand? Then it keep on dropping. Then the funny part of it that you're going to know the main reason or why is called history repeat itself is this. You see, the market moves from here. Few days ago, you see around 4052.44. That is few days ago. And it goes up and reject and reject and reject and reject and reject. Then today, after all the whole movement, see the market comes back. The market comes back to almost to the exact position where you rejected. You understand? So this is what is showing you that history repeats itself. You see where you come back to come and relax. So this is what technical analysis is all about. But it's not just this. When we move further, I'm going to explain why the market moves all the way there and come back. And we explain all the other terminologies and risk management and other trick the market play inside this chart before it comes back to this place. You understand? We are going to discuss all that. So just stay with me. All right. So this platform is called TradeView. It's called TradeView. I will drop the link on the group chat so that you guys can, check it out and have it. So in your free time, you can just open it and study it and understand what is happening inside. You understand? Though I'm still going to teach us more about this trade view. I'm going to teach us more about it. All right. So this is what technical analysis is all about. So the next one we have here is, sorry, this chart is running off. So the next one we have here is fundamental analysis. FA, fundamental analysis. This fundamental analysis states that price moves based on the economical health and monetary policy of a country. You understand? If you remember when we said, when we talk about the participants or who moves the market, you remember we said central banks and the government. In brackets, we stated monetary policy. You understand? So fundamental analysis comes to play about price moves based on the economical health and monetary policy of a country. You understand? This trying to tell you that if a particular country economy is in good health, in good condition, you understand, their currency will be strong. Their currency will be in a positive standard in the forex market. You understand? And you also remember that forex trading is the buying and selling of global currencies, in the sense that you use another country currency to buy or sell another country currency. So what makes you to buy or sell other country currency is because of the economical standard of such country. If the economy is good during the trade, you might buy. If it is bad during the trade, you might sell. So in forex trading, you're doing one thing. You're either buying a currency or you're selling a currency. That is it. So that is how it happens. And whatever you do, basically fall around the health of such economy, of such a country. You understand? So fundamental analysis evaluates the underlying economical factors based on financial news. You understand? Just for instance, when like US or Canada or Australia or China or Japan or British, name it, you understand? They can come out, or Donald Trump or any other um, president of such a country can come out to say, okay, um, we have um, some amount of investors coming to our country to come and invest so and so amount of money. You understand? So when they make such statement, what do you expect? Is a positive news, right? Yeah. So this adds more value to the economic of their country. Then in return, improve their currency strength against other countries at that point in time. So when such news are released, you expected it to be on a positive measure, then you can decide to buy the currency or to sell it. Depends what news they drop at that particular point in time. So that is what fundamental analysis is all about. Then central bank policy, interest rate decision, Hooksky versus Dovish statement. Just like what I said now, if the statement is negative, that means it's going to play a negative impact in the country's currency, in the forex market. If it is positive, it's going to play a positive impact in the country's currency. Then inflation, CPI, PPI, employment, NFP, unemployment rate, GDP, retail sales, election and conflict and war. So it's still the same thing we are talking about. You understand? So when in a country where they're having an election or something, it's likely the economy will drop a little bit. Their currency might not do well at a particular time because such country are mostly under expenses at that point in time. So the currency may not do well. And the country where there is conflict, the currency will not also do well because the economy will not be stable. The same when there is war. Just imagine few months ago, we have some countries under war. I will not mention name. You understand? So such countries, they are, if you go and check their data on the financial market or forest market, even on stock, you will notice that their currency is not doing well. It's on the negative part. You understand? So when you're trading such currency and you match them with other countries where there is no war or conflict, other currency will do better than them. So this is what fundamental analysis is all about. So for you to capture all this news, we have I have another site. I normally check this news. Site is called this site is called this is the site where I normally check this news. This site is called Forex Theory. Forex Theory. You understand? It's Forex Theory. So here you have all the news that comes out most time daily basis, most time weekly, most time monthly, you understand, depends. So some of the news, this site will state it and analyze and tell you what to expect in the market. You understand? So this is what fundamental analysis is all about. When you look here, when you see this is time, this is date, and this is time. All this time here states the time each of the news is going to drop. Then this is currency. This currency here states the abbreviation of every country currency, just like this. This is British pounds. This is Australia dollar. This is Australia dollar. This is CNY, that is Chinese yen. Chinese yen. This is Japanese yen. This euro. EUR is euro. This is Swiss francs. CHF. This is the United States dollar. You understand? So and so forth. So that is how it is, guys. Hope you're understanding what I'm saying. Please, if you're understanding what I'm saying, just type yes on the chat while I proceed. Just type yes on the chat while I proceed. All right. So then it comes to this box, shows you impact. Mostly when you have some kind of news, this box will likely change, like this red. This red now mostly is high impact. These are high impact. This is low impact. This medium impact. You understand? Then just like something like BRC retail sales monitor. Let's see. See, low impact is on red. You understand? What we have high impact here. Let's see. Low impact. Even this trade balance, they say low impact. Still show positive impact in Chinese economy, because when you look at it, previously they have 724B, is forecast at 810B, then it turned out to appear at 859B, and is on green. You understand? This shows you that the economy of China, their balance was strengthened. You understand? So it's good, so that is it. So now, looking at this, when you have this before and you want to check on trade, you check this and it comes this one will tell you that, okay, this currency is going to do well on this day. You understand? But you don't capitalize on this particular figure alone. You still check other of their news and see what comes up there. So that is it. Then trading a fundamental analysis is, first you must consider your technical analysis. Fundamental analysis is mostly sometimes what will give you surprises in the forex market. Let me show you the chart and the type of surprise it will give you. This is good. So you see, when such news are released, something like CPI, sometimes NFP, sometimes they are the kind of news that will give you this type of candlestick that will be long, because the big heads in the market, the central banks, the commercial banks, and other financial institutions, they know about all this news, so they wait for it. So once it's released, it's going to trigger a very sharp movement in the market. So this is why they tell you that forex market is risky. You must use your support and resistance, and you must use your stop loss, and take profit at a given time. Although some people stay on the trade months, weeks, daily, and so on. But still, you must know where to set your support and resistance and where to set your take profit and loss because of most of all these news that fall into fundamental analysis. You see, all these are because of news, most of them because of news. And also, sometimes all these are because of news. Sometimes they also occur when markets must have overbought. Like this market now, overbought. It has been hitting that resistance and hitting and hitting. So the movers in the market, the commercial bank, investment bank, and all that, they have seen this move. So sometimes they take advantage and pump more money into the market, or they take larger position in the market. Once they do, to push the market back, this is where you see all these kind of long candlesticks. You see. So this is what fundamental analysis does to the market when there is news. You understand? So let's go back to the next one. Let's go back to the next one. So here we have sentiment analysis, or you can call it sentimental analysis. You can call it sentimental analysis. Sentimental analysis is basically about the market is driven by human emotion, primary fear and greed. You understand? You see, fear and greed is one of the sentimental analysis. Remember, we have three: trading analysis, technical analysis, fundamental analysis, we just finished, then sentimental analysis. Sentimental analysis is basically psychological. It's psychological because it plays with your emotion, your fear, and greed. You understand? The market is driven by human emotion, primary fear, and greed. Sentiment or sentimental analysis measures how the majority of market participants feel about a specific currency on or market condition at a given time, e.g., risk on versus risk off. Take for instance, many people will like many people will like many people will like what is it called? Many people will like USD, that is United States dollar. You understand? And they feel is always strong and not that negative. You understand? So they will just sit on it. Even when they have a clear knowledge or understanding of the technical analysis and the fundamental analysis, the news from other countries and all that, you understand? Or they see a negative news in the US economy, you understand? Because of their emotion, the love, the likeness they fix on this USD, that is United States dollar, you understand? They remain in the same position, you understand, without minding other things. In this way, they are letting their emotion to control them in the market. Then the fear there is sometimes when you must have gotten your technical analysis, fundamental analysis, and you come to sentimental analysis, you now feel, okay, is it going to work? Is it going to play out or is not going to play out? You understand? When you feel this way, you take a trade. Once you take the trade, before the trade moves, you run out of the market. You understand? Because you are letting fear to control you. You know, you have already stated what you want from the market and how you feel the market will go. Your duty here is to set your risk ratio, then set your take profit, then set your stop loss. But still, after doing all that, when the market moves and shake, you let fear come over you, go and remove it. You exit the trade. You understand? Then the greed there is those using larger lot size on little capital. Or when you take a trade, you feel the trade is going to go more higher, you start increasing your take profit session to the higher level so that you make more money. Or some people trade without having target. Every successful trader, a very good trader, has a target. It could be daily target, monthly target, or weekly target. You understand? And once they hit this target, they are out of the market. You understand? And one thing you should know about trading is, if you understand trading and you know the time, we are going to discuss trading time. But when it comes to greed, if you understand trading, you know the time that when you come to the market, you see the trade clearly before you take. And during this period, you always make profit, because this is when you understand what the chart, your technical analysis is saying. This is when you understand what the fundamental analysis is saying. And this is when your sentimental analysis is in check. You understand? And this is when you make money. Now, you come to this time, you make money, you meet your target, you leave the trade. But because maybe lack of having something else to do, or you feel, okay, there is more opportunity in the market, you enter into the market again, knowing that this particular time is not your time. This time you don't used to understand what is happening in the market. You don't used to understand what the market is telling you. You don't have a right hand fundamental analysis of what will happen during this hour. You understand? Even when you feel you're seeing the chart or your technical analysis, but your fundamentals are not there. You understand? Then you switch in your sentimental, greedy self to trade. You understand? In this way, you can enter the trade and lose all that you have already made in the past. You know, this is why being greedy is very risky in the forex trading. So having a target is the best. You understand? So that is it. Let me show us something. Let me show us something. See, like greed, this is what greed can do. You understand? It's possible you might come to this trade, you take a buy and enter here. You're supposed to exit here. Then the market drop. Then you think it's going to go more higher to pass this place because it has gotten here. But because it's not your time, you don't know what is going to happen around here. But you understand this. You understand this move here and return. And you've taken it. You understand this move, which is still close. Support here and here and return. But you don't understand this. You understand? You don't understand this. Something like this is a product of fundamental analysis. I don't know if you guys are getting me. Please, just type yes on the comments on the group chat. If you're understanding what I'm saying, just type yes on the group chat so that I will know. Something like this is a product of fundamental analysis, even though it's part of technical analysis, because it's still maintaining the same still maintaining the same resistance level. You understand? You can call it part of technical analysis. But this move here is basically a product of fundamental analysis. You understand? I wasn't in the market when this happened, unless if I check it out. But this must be a product of a news or a larger players moving the market. That's the only thing that will make you have this massive candlestick. You understand? So whoever is in this market must have gotten it right to trade here, take profit and return, then trade here, take profit and return. And here, deceiving movement is likely to, once it goes like this on a row, you understand, and you feel, okay, the market is going to break out and go. From nowhere, boom, it returns back. You understand? This way, you are going to lose. You understand? Even some people will trade this, even when they see this long candlestick that is here, they will still wait, thinking that it's going to reverse back. And before you know it, it gives you another drop. So this is what greed will likely cause when you don't stay out of the market when you're supposed to. Something like this might happen to you. So that is it. So just understand that forex trading is risk, and fixing your stop loss and having a target is the key. And also, whatever you do, ensure you trade with the amount of money you're willing to lose. You understand? So that is it. Let's see the next slide, what we have. So guys, thank you. Thank you guys for staying. You know, this class, I'm supposed to have this class on YouTube, you know, supposed to have it on YouTube live, but I never knew that YouTube live doesn't work like other platform, other social media. I was thinking maybe once I come on YouTube, I'll just click on live and everything will start working. But I didn't know when you click on YouTube, especially when you've not used YouTube live before, it stays like 24 hours before they will approve, you know. So when I came, I've already prepared this slide to play it on YouTube live, you know, but when I came, I clicked and I was having a countdown, you understand? So that was what happened. So I left it. And anyway, I'm still going to share I'll still share this slide on the group chat, and I will still upload this tutorial like this on YouTube. You understand? So in case you miss out on something, I'll drop the link. You can always go to YouTube and watch it back. You understand? Then thank you for watching Opportunity Mindset today. See you on our next class. So guys, on our next class, we shall be starting our next class with understanding currency pairs. You understand? So when you hear forex trading is buying and selling of global currencies, you understand? This is when you should talk about which currencies and which pairs. So when you hear something like Euro USD, this is what the pair is. You understand? When you hear something like Australian dollar versus USD, that is what pair is. When you hear AUS, that is gold versus USD, that is what pairs is. So we are going to discuss more about them and the real meaning, which one is which, in our next class. So kindly drop your questions on the comment section. Like and share. Drop your question on the comment section either you drop it on the YouTube when you get there, or you drop them on our group chat. You understand? Then from there we can proceed. Okay, thank you very much. See you guys on the next. And okay, just drop your questions. I will respond. When I see them, I will respond. All right, thank you very much.